Introducing Xcredi LP staking from industry-leading RWA loan collateralization platform Credify. Earn 10% cashback in USDT after 90 days, with more rewards coming soon for Xcredi holders. Visit v2.credify.finance.
Good afternoon, everyone. BC Richfield here, coming to you live from a very rainy London today. A big shout out to everybody watching the stream live and for everybody who is watching this on recording. Would also like to say a very big and special shout out to BitGet, who are very kindly sponsoring my show today. Really, really wonderful crew of people. Have done so much work to their exchange recently. Nothing but respect for them. Had a wonderful time out with them in Singapore. Got to meet and know the team so well. So if you are interested in trading with us over there, there are loads of goodies that you can get access to, and you can find the sign up link in the description. If you can't, please do let me know. Anyway, on to the show. So today, obviously, like normal, we are going to have a very firm eye on Bitcoin. So one of the things that I think is really, really key to kind of cover on this show that I want to do more is we kind of put a lot of reasoning behind the decisions that we're making and why we make them. Now, we've got a wonderful, vibrant community over at the Bird Nest. And again, if that's anything that interests you guys, you can find links and bits and pieces in the description. But the reason that I'm mentioning that is because a lot of the times it's the questions that we get asked by members. And I really, really, really like the engaging questions that we get. So when we're looking at this, people are kind of saying, look, when we see these calls are made, right, or we see that you've got a line there, or you're talking about this being a good area of supply or an area of demand, what's kind of leading you to that thought process, right? Because it's so very easy to just get swept up and taken away in the euphoria of everything you're seeing, people flicking between different social media accounts all the time. Then you've got TikTok, Instagram, you've got all this noise, all these very visceral things kind of coming at you, affecting your decision making, when actually at a real kind of core level, people are worried so much about being right all the time. Yeah. So the key thing is actually it's about being profitable, and we post all of our trading call statistics every single month. All the members can see it, our P&L, what you would return on your account, every trading call, fully transparent. For example, let me show you a couple of the bits and pieces that we've done recently, right? So you can see what happens is you get a call from one of the professional trading team, one of the biggest honors of my career being in charge of this team. Not that it's really a kind of management heavy job. They all just go and crush doing what they do. But it's my job to kind of have an eye on, okay, are we communicating this in the best way to members, right? Do people understand why we took these trades? Look, these calls you can make, I mean, some of the calls did over 1,000%, right? You can see on here as well, so plus 66, plus 44. I think there were plus 50 calls in the past month. But these are not a means to, this should be, sorry, a means to an end. You shouldn't rely on these kind of calls. We want to teach you how you kind of make these decisions yourself. So with that in mind, what I want to do today is kind of take you through how you can look at these key levels and really what we're looking at as a professional trading team and how you can do the same. Now, a lot of this obviously aligns itself with Bitcoin. So that is very much where we're going to start. But just to run through the chat very quickly today, guys, really great to see you. Gio, my dear friend, Ozzy as well in there. Burn, great to see you back. Our wonderful Erica. Seb as well. How have you been doing, mate? I like this. Just straight away. Love the honesty, though. Straight away from Ozzy. Still FOMOing in on FET USDT. Well, the funny thing is, look, and this was taught to me a long time ago by, professional pit traders. So we're talking about the people in the old school trading pits who would just scream at people with this just big bear of a man to the people in the pit if they were buying when, the market was going up, just saying just amateurs just buy when the market's going up. You buy when there's blood in the water, you buy when there's opportunity. So I'm going to just try and kind of convey my point around why I think this is a really big opportunity at the moment and how I'm kind of getting to that end. But also, and I'm always incredibly honest about this, I always have a plan to trade both ways, right? If I'm thinking we're going to get support at a certain level or there's a certain area that I'm looking to buy at, and we don't get the trigger that we need and we get some signals that we're moving bearish, I will first move bias bearish on an intraday basis and then look to see how that develops in terms of a swing. I've always found it very, very, very helpful or useful, sorry for want of a better word, to have a system that I can overlay across many different time frames. Okay, that way I'm not chopping, I'm not changing, I'm not trying to bring in a million different techniques, a million different indicators. I just have a very tried and tested system that I've worked on over years, very, very simple. And I want to be able to look at a daily, I want to decant a daily down onto a middle time frame, yeah, or a framing time frame, right, where we can say, okay, if our bias is bullish on a daily, how do I then convey that on, say, a 4-hour or a 1-hour chart? Then I like to frame everything on the 15-minute chart to wait for that kind of impetus. But ultimately, it all starts with these, our key levels, okay? I was very, very fortunate, I think, to learn in my early days from some wonderful people, from people like Tone Vase, met some people from his crew recently when we were over in Singapore. And honestly, I owe that guy a lot, showed a lot of faith in me very early in my career and was a wonderful influence on me. And just an all-round really, really, really top guy. But, I was very, very fortunate to learn from two of the best, in my opinion, which is Trader SE and Trader Dante. And in terms of levels, you're not going to get any better than those guys. All right. So what makes up our levels? How do you spot them? And when you're looking to spot them, right, how do you then action them when you're there? So I thought it would be a good piece today. Look, I was very vocal. I wanted some down move on the market. We've come into this key resistance level here, which is this sloped yellowy orange line. We can see, look, when you're looking at things like this, I'm always saying to myself, okay, resistance, 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 resistance. What's the odds that is resistance again, right? So we're also going to look at how do we kind of look at this? How do we decant whether this is going to reject price or whether this is going to pump price? Okay. And these are all things that we want to just put in. By the way, for those of you that don't see this line here, I think is cleanest on a weekly chart. I like these two touches here specifically. And something else to say is don't be afraid to redraw your lines. Yeah. Don't feel like that's the thing. I have so many traders that we teach that say, yeah, but my original line was over here and, it's just cheating if I move it. Definitely don't think like that. When I was learning from Dante, and again, in my opinion, just one of the very best in this space of this, every Sunday, sit down every Sunday night and redraw every single level and use that based around recencies, or you want to know what price has been doing most recently. So, previously, for example, before we had more data, then I had a line going through here, right? Doesn't look like there's much different to this one. I'm just going to do it a little bit thicker so it stands out, right? But there is, yeah, that was because I had these two touch points. Then as prices developed over through April, throughout the year, we then got more of these touch points. And I don't mind this here. I like seeing price run these levels a little bit. But then, when I had the data up to here, and then we started developing in through May into June, it made a lot more sense to readjust that line. And I wanted it to land on this one. I'll tell you for why. These two touch points here, combined with this, are super, super clean. Getting these levels right is really, really important because they are the levels in which we look to action trades. You don't want to be taking trades in the middle of nowhere. You really want to be focused in on taking trades at high probability areas. And that's typically your external liquidity, right? That's your, resistance levels. It's your support levels. And then you're looking to kind of decant that into an actionable system, which we're going to cover in a moment. A few more good mornings because you're all absolutely showering me with good mornings this morning. I love to see it. Jesse, good morning. Mickle911. Victor, hello, mate, from the Discord, along with Seb. 7 hits on that resistance would lead us to think it should break soon. Maybe, but also kind of sometimes a little bit of a common misconception because actually, when we're looking to draw levels, there's a few things that you want to look at. You want to look at how often price is engaged with it, what time it's spent at the level, how long it has acted as resistance, obviously touch points, and then, I don't really want to, but I have to quote him because he puts it so well, Dante, violence, right? If you're tickling into a level up here, yeah, and you see price kind of come in and do something like this, and it kind of meanders, kind of, unless you get a swing failure, right? But let's just say you do, but then nothing really comes of it. It's just kind of doing this, yeah? Then what you're doing is, for me, it doesn't really have that impetus, right? Price is kind of sticking around here. It's a little bit messy. What I want to see in terms of a level is like a touch into it. You normally get that deviation, but then a very, very quick and violent reaction down. What that tells us is it tells us that there's a lot of sell pressure there. And obviously the opposite is true for buying pressure as well. And we're going to look at this on the lower time frames. Okay. So as we're kind of going through this, good point there, Seb. Burned as well with a good question. Zach, good morning, fam. Right back at you. So what have we got here? The Bourboness. How do you see this Monday as it the last day of the month? Really, really good question. Well, quite simply, we see this, as it is, which is the monthly candle, right? So we've got the monthly close coming up. Let me just let me get these positions quickly. And let's just get these, save those down just so that we've got a bit more of a clean chart here. These other bits have gone as well. Lots of travel recently, which has been amazing, but it just always serves to remind me that I really must always keep these charts in check. Right, so really good question there. And let's start with that because we want to start with the highest time frames and then work down. I don't do too much of my business on the monthly or on the weekly, but it does tell us a lot. So let's pop to the monthly. What does this candle tell us, right? Well, first of all, the candle does tell me something here, right? Now, we've got this with the last couple as well. So, always a little bit tricky to know. But this here, the long downwards wick, what have we done? So we're looking for price to really engage with liquidity, the external points or the extremities, right? So that's highs and lows. Yeah, swing highs, swing lows, but also gaps. Gaps are so very, very important. Now, while this gap here on a weekly has been rebalanced pretty much to the tick, we can see how price gets brought up here to the point the bodies can barely even bring themselves to close inside. Now, while this looks like a bearish candle, in my opinion, it's actually quite a bullish candle. And there's a contrast to that, right? If we were looking for, a change in delivery here, then, this has got some importance to it, right? Because I would favor this up close candle here, acting as a bit of an order block here, right? Up close candle, price closes below this. There's an expectation that this area now acts as resistance. And a way that we can look closer at that is by drawing out our Fibonacci here just to a 50%. And look how it's respecting that 50%. We start to really kind of make progress and close above that. Then I think we're really, I don't think that this kind of bearish order block here is really going to make that much difference. However, at the moment, we need to respect it. Now, something I'm looking at here is I'd love to see price just push up a little bit more today if we can. Obviously, price was sitting higher, which made this a really nice bullish pin bar. That would be a second, or hammer candle, you guys might know it as well. That would be a second pin bar here. And for me, and to quote a dear old friend of mine, Bast, we'd always look for that second confirmation candle, right? So we had this bearish engulfing candle here, just kind of snuck past the body. Price then moving down, which is absolutely fine because, look, our premise is this. Price has now swept a key source of external liquidity, which was the all-time high from back in November. That's why this level for me offers such relevance, because we can see what strong resistance is. So what have we done? We've taken the form of external liquidity here. Why do we expect a reaction here? Well, people that were short from here, that have their stop losses above here, generate this big liquidity pool. When price engages with that, you also engage breakout traders, bots, algorithms, okay, depending on the system. What you tend to get up here is a lot of market buy orders. As people's stop losses, etc., get hit, the market, it pukes those positions into the market to just make the nearest and cleanest pairing it can make. So what do you do there? What you do is you end up generating this huge pool of buy orders, right? So if you're a major player, or you're a collection of major players, etc., and you have got some serious wedge to invest, then what you're going to do is you need the liquidity to put those orders in. So what tends to happen is these become really, really tempting areas to take the opposite side of that, of the bid, and then push the market back. Now, it could just be a corrective move to a gap like this, or to take liquidity below a low. But ultimately, we're now looking how price reacts. And in here, this here looks a lot more like a consolidation in nature like this, for example. Yeah, before we had this pump, price kind of chopping around. We just kind of engaged with this gap here. Then we got this breakout play. And obviously, chart-wise, we've got this, but you can see this down move here before price started to move up. This, to me, with these long downside wicks, just doesn't look that bearish, all right? So with that, we want to see this come up. We want to see the monthly close. But overall, I think as long as we hold this area, especially on a monthly scale, something I'm really excited about is just the fact that we've got just untapped liquidity above all of these monthly highs. Actually, not that one in the middle. I think we already swept that. But look at that, right? These offer a real catalyst for price to come after, all right? If we look at it in the opposing side here, when we started to run down, we can see untap low, untap low, untap low, untap low. When price really did make that breakdown, look how quickly it moved through those, attacking that liquidity, and then down to fill these inefficiencies or these gaps in the market. So very good question there in terms of that, Boom. So what am I looking for here? Well, I'm looking for this to close in and around where it is. The fact that we close here, we're within the range of this candle, the body, so it doesn't really tell us a lot. So what I would then do is say, okay, I think it's a much more bullish month than it is a bearish month. What does the weekly tell us? All right, now I know obviously the weekly has got longer to play out here, but I'm always looking for, okay, what was the reaction like in here? And this reaction was really good. Now, I myself, and I saw a lot of other analysts as well, looking for this low to be taken when price broke down here. Why was that? Well, quite simply, you got a low, lower low, a lower high, a lower low, right? To a lower high. Now, made sense to me to continue the trend downwards and take the key liquidity. However, the fact that we didn't, and I said this at the time, the fact that we didn't take any key liquidity here and price has had this rip has now led to us having a structure break to the upside. So let me just do that green so it symbolizes that. Now, why is that? Because we've got a lower low here, lower high, higher low, now a higher high. So what I'm looking for here, let me just get rid of this for a moment. What I'm looking for here is this gap, right? Now, tricky because I know, we're right at the beginning of the week here, so we'd need that to close, to close into it. But we've got this gap here now. So I really do think that price could move down maybe Monday, Tuesday into this area. And that's really what's going to tell us where the buyers are. If the buyers are really willing to step in here, then we should see a strong reaction. We monitor that on the lower time frames, and then I think we look good. The other thing to say is that we've now set this order block, which is of great interest to me here, by closing above it last week. Yeah. So this week now we're saying, okay, well, if this is a large order block here, right, and typically what I allow for on a bullish order block is the top. This I allow down to the bottom of the wick, unless it's a really abnormally long wick like this, in which case I'll favor the body. If I have adjoining candles, meaning consecutive bearish candles here, that whole area makes up one large order block. Now, obviously you can't just leave that on the chart and say, oh, okay, well, I'll just long this whole massive area because it's huge, all right? So, you could adjust it down to, say, the bottom of the body. The key thing for me is that we hold above this equilibrium. Now, something that we often see, and if we just take this to the top of this move, right, now this represents our 50% line. Quite often when you see these pumps or these drops, price likes to retrace, either to that kind of level or around the kind of golden pocket if you're somebody that uses Fibonacci's. So it makes sense to me that if we've taken the liquidity above this high now, everybody's starting to get super bullish as well, right? And that's always something to watch out for because it just means liquidity is really pouring into the market. People are entering positions late. People are over leveraged. Look, we see it. We have a humongous trading community over at TBN. We work with literally tens of thousands of members. And it's a really difficult thing to do. I did it in my early stages, just went too heavy, went too early at stuff. And other people will do it as well, and they will over leverage and they become targets. Quite often with the market, what seems the most obvious can play out, but by a route that normally takes a lot of people out first. Yeah, that's why so very often we see swing failure patterns, right? So swing failure pattern here, price sells off. Like, it doesn't look like it, but it was, right? Swing failure pattern here before price sells up. Yeah. Now look at the difference here. When we came into this level, look at the close above that. Now that was a bearish close, fine. Yeah, but look at the long downside wick. It shows you there's absorption coming in there. And this works on any time frame, okay? So looking at that, what's a swing failure pattern? Well, it's when you've got a swing high or a swing low. price swings into it and fails at that, leads to price pulling back. You don't need to see an ultimate reversal. You can see what happened here. Price took out that swing low, failed to get beyond it, retreated back to here, liquidity within this order block, and then did the same. We then see, another failure here, price corrects back up, etc. So without seeing those really big, strong impulse moves above, which give us that conviction that price is ready to move, then it can be a little bit indecisive. And the reason I'm saying that is we've kind of had that here. So this swing high here, price has run into this, and that's a decent close. We've got slight wicks top and bottom here, with the bottom wick being a little bit longer. So for me, it still remains pretty bullish. Well, it still remains very bullish. We've recovered market structure on the weekly. The daily's looking very strong. But I'm not really looking to kind of ape into things here. I'd much rather see price pull back to this area where we have this beautiful gap. And also something that I covered, if we're not going to kind of get that far down, then this is the area that I'm watching here, right, on the daily. And if we just turn our levels back on here, yeah, we can see that overlay is the same block. All right, so I'll get rid of this one now. We'll pop our levels back on. And now we have a good trading plan, right? We're either looking for longs in here. We need to see that strength. We need to see that recovery. Or we can wait for price to get back above this level, because as SC would say, always rings in my head, and my dear friend trader Dank as well, deviation, right? Is this a deviation of that level? Yeah. So if price has now got back underneath, then it's showing a little bit of a sign of weakness. However, we could very easily also be seeing price recover this level again. And then you've got to say to yourself, okay, right, well, if price is going to recover the level again, yeah, or like this, for example, peaks itself above, comes back down, up, retest, holds this gap, allows us to move higher. Fine, it only moved up to this liquidity here before we broke down. But look what it told us. We broke back down below this level then. The big question is, well, why are we back down here? If the buyers are here in force, if there's enough momentum, if there's enough buying power to push the markets higher, we shouldn't really be engaging with these levels again. We've broken out, we've retested, we've gone up. There would be an expectation for me that this gap here would have held. Yeah, it didn't. Should have been bullish. Failed, we closed below it, so immediately we know to target the next liquidity pool. And then until we're proved otherwise, yeah, that would then be purple on my chart to show that it's been inverted on this close. We then chased it down to there and then ultimately lower, always seeking that key liquidity. So that's what I'm looking for here. If this is indeed a deviation here, and we start closing below this order block, then I think price is coming down for the inefficiencies that exist in here. There's a small gap here, there's a small gap here. And as we know from the higher time frame on the weekly, we've got this big weekly gap here as well. So ideal scenario for me, we've seen the rejection here. We're open to short positions anyway, literally just because on the lower time frames, it makes sense to take the pullback here. Now we're looking here to re-long. We also have this, right? I really like this level here, resistance, deviation, it comes back underneath, large sell-off, right? It then offers close above, retest, price pumps, all right? Then it's offered support here, close below, retest, price sells off. Again, there's a decent bit of aggression with that level. Price comes up, ultimately rejects at a higher time frame level, and then really blitzes away. But look, resistance, deviation, underneath, close above, retest, price has then pushed up. So I'm really looking for the kind of interaction that we're getting at these levels. And I do like this thin purple line here. All right. When we look on the 4 hour as well, you'll be able to see a little bit closer the interactions that we've had. Let me just turn my session breaks off. Yeah, focusing on this purple line here. Look, resistance, strong close. That's what I mean when you hear me say that, a strong close, a big bodied candle. You don't want to see something with a long upside wick showing you absorption, right? Retest, perfect. Retest, perfect. We can see prices can't go in there. Think of it like a hot pan, yeah? I got a good funny analogy about that as well afterwards, but I'll try not to go too off track. Think of a hot pan, yeah? Someone hands you a frying pan that has just been mildly run under warm water, so you can feel the heat through it, but it's not hot. You put your hand on that pan and you can just put your hand on it as long as you want, right? Now that's when price starts to kind of stick to a level. Yeah, see this kind of getting up above it. Yeah, you can hold there for a while, and then you're like, no, it needs to be hotter, so you have to back away. However, if that pan is searing hot, you literally touch it and boom, immediate reaction. You're like, a lot of expletive words, if you can control yourself that way. And then you are like, right, okay, I can't even bring myself to, it's so hot. You see that immediate reaction. This is the violence. This is the move that you're looking for, right? You're looking for that absorption from the lows, those big, low downside wicks. And that's what we also look for, on swing failure patterns. This is what we look for when price is engaging with any level, like a range, and also what we're looking for here with the order block, right? So look, we had this big sell-off here. We'll look at this as well in the lower time frame. This is what we were looking for, that breakout. But as we said in the report, the key thing is one thing's taking an intraday play to here, which we discussed yesterday. The other thing is to wait for confirmation, wait for price to kind of get back above this level. Give us some structure break here, find that sweep, find that break, and then allowing ourselves to be a buyer here up to our next level, which is 67,247. Okay, so while we haven't seen that, but we did see the breakdown below here, allows us to then zoom back out to our higher time frame level and say, okay, what's going on down here? Where's the key liquidity target? So I'm watching these gaps here as well to see these gaps here hold. For example, on a 4-hour, it'd be wonderful to see this 4-hour in the next 30 minutes, to see this 4-hour candle recover this gap, meaning that it doesn't close below it. If we start closing below these gaps, then my assumption is that price needs liquidity lower, and this swing low here at 62,674 would be the target. Again, I wouldn't just ape into a short position here. I would need to see some confirmation. Apologies, guys, as well. I've had the chat on freeze, so I haven't seen some of you coming. Zach, I think we said good morning. There as well. ZX Robin, great to see you. Whack, my good friend, how are you doing? The Konaku, welcome, mate. Burned as well. Wouldn't the previous all-time high sellers not already have taken profit and closed the majority of their shorts? Really good question. Yeah, sometimes, right? But actually, major positional players that are in these charts are looking very, very high time frames, right? Often they'll take, allow for mean reversion. They'll also be in large periods of drawdown. So it's one of those things that you can also get it the other way, where people are actually long at that position at the top. We've had that big correction, and they're waiting for price to get back to that area to mitigate that risk and close the positions out. Either way, again, our assumption is always that there's liquidity above these levels. Typically how the markets work, how the market makers need the markets to be efficient. Hey, Bedford Gordon, how are you doing, mate? You're better late than never. Yeah, a lot of liquidity, a lot of wicks around 62K. I think just kind of showing that absorption, right? So what Seb's kind of talking about here is looking at, if you to take a look in this kind of box, this area here, all these downside wicks, a really, really good way to look at this is the wicks on a candle are where price has tried to go. The bodies are where it succeeded. Yeah. So like that's what makes pin bar candles, at a key level, such a nice thing to see, because as we got with this one here, we sweep key liquidity, and then this long downside, this tells you price is trying to drive all the way down here, like these big bodied bearish candles that we see. So price tried to get all the way down there and failed, immediately got bought back up. Large body to the upside shows the pressure and the move forward. Really good question. You can speak to our business development team over at the Bird Nest. If you would like to, please feel free to just ping me in my Twitter, and I will make some connections for you as well. We consider lots of different partners. We try and align and work with the very best partners in the world, people like BitGet, Binance, working with amazing companies like Flowkey as well, who we did we've just got such a brilliant relationship with them, as well as just tons and tons of others. Match Chain, big project that's coming up, really, really exciting. But yeah, please do. We have a very, very stringent due diligence process, but we do like to be inclusive. But yeah, if you would like to get in touch, just drop me a message, or you should be able to find something down in the description, and you can certainly reach out to us on our website as well. So Bern, if we have a daily close under the previous Monday low, will that not create a bearish breaker block and signal lower prices? Yeah, I mean, just looking at, are you looking at this on the 4-hour or on the daily, mate? Let's have a look at the daily. So this one, Is this what you mean? So there's Wednesday's candle. So that would, if I was looking for on a daily scale anyway, for there to be a breaker block here, I would look for this down close candle before the pump higher, then price to close down below this. And then, yeah, that for me would become a breaker on this scale. I think if we were looking back to Monday here, yeah, I would still be focusing this one here on Wednesday, mate. I would think, look, down close candles here. This would then be the manipulation leg higher. We'd look for then price to come down. So like this, yeah, that's where, you know, that's the position there. That's the down close candle. Price moves up, ultimately taking liquidity from here. It closed back below this. I would look for a retest and then for it to be shorted. However, that's obviously if you're utilizing breaker candles. For me, I'm kind of concerning myself more and more so with liquidity above anything else, right? Looking at this area here, I wouldn't mind seeing price getting driven down a bit deeper into these lows, because I do think it will then make a lot of people bearish. It will catch a lot of people offside. And they're typically the areas and the times that the market really, really likes to move. So moving down to like one of our lower of all time frames here. Now ignore this for a moment, because that's the 4-hour gap. We want to see that held. What can be an early indication that we're about to reverse here? Now for me, I'm looking at gaps here for an early sign. And what I'm saying is, okay, what's price engaged with down here? What's this reacting to? Now, I like to see aligned bias here, right? And what I can see is that we've got this hourly gap down here. Price has come down and taken this swing low, which was untapped. Liquidity below that. I'm not saying it's important enough or key, and I still would be looking for this. But ultimately, price coming down here and then pumping, what would I look for? Well, really simply, I want to see forms of resistance and support flips, yeah? So this is a bearish gap. Ultimately, what price should do here, if it's just got enough selling pressure, yeah, price came into here, found this bearish gap, rejected. Now we're just looking for it to do the same as it goes down to our key liquidity levels. What would change my mind in this respect would be if we got a bullish close above this, has to be a 1-hour close, right? If we get that, then I'm saying, well, okay, well, price hasn't found enough sellers there, so where is it going to target next? Well, this high at 64,711. What does that coincide with? This coincides with this level here, which is our higher time frame weekly support resistance level. Now, when you kind of zoom out and really compress the chart here, you can really see it doing its thing, right? Strong rejection here, strong rejection here, rejection here, deviation up and under, a big sell-off, right? Now, you can see, and it obviously the lower the time frame you move, the messier it is, but it's really clear to see here, look, deviation, price gets back above, retest, pumps, can't close below, tests again, right? Price really failing to get below here. Look at the long downside wicks until the momentum changes, right? Until we get that strong close below and then another. Ultimately, price then holds this level. And for me, this is a real kind of key pivot point. Yes, it might look messy to you guys as you see it here, but ultimately what we're using here are our high time frame levels. These are more often than not represented as an area rather than a line, but we want to refine them down to these points that we can, because then we know, look, rejection, support, rejection, up, support here, close underneath, rejection, yeah, deviation underneath again. But then you see how price grinds its way back up, and then it simply struggles to get back underneath that line. So what does that tell us about where we are? Well, quite simply here, this is why I like this line so much, yeah? Resistance, support. Price hasn't even managed to kind of get back down into this for a while yet. So that's what I'm looking for here. I'm looking for this area to hold. But ultimately, on an hourly scale, we're delivering bearish price action. We're in bearish structure. So we need to see a bullish recovery before we can start thinking about long positions. But I'm good with that because, ultimately, it depends what time horizon you're looking on. But for me, when I'm looking at Bitcoin, excuse me, take a sip of very lukewarm tea now. But when I'm looking at Bitcoin here, I'm saying, well, where am I a buyer? I'm a buyer as low as it will allow me to take it. I don't know exactly where it's going. It could really flush deep. I don't think it's going to. I think we need to align economic factors. I think we need to have an understanding of market cycles. I think you need to understand that it's an election year. What's going on with things like the S&P 500 and the NASDAQ? What's going on with equities, technology stocks, just what's going on with China putting the money printer on, like 128 billion or something dollars that they just printed. This is very, very similar to the stimulus that we saw in COVID, right? And what does that do? Well, it's like quantitative easing. It pushes capital back into the market, basically giving people free money. It's a lot more complex than that, obviously, but they put the money printers on. There's a higher circulation of money, normally ups the risk appetite of the markets, meaning that, you know, risk assets like the NASDAQ, like technology stocks, like S&P 500, for example, really see the benefit of that. And there's not really any stock that's considered more of a risky stock, even a beta risk asset, like Bitcoin, right? Now, we all know what happens when the money starts flooding into Bitcoin. We see that initial pump, price starts to get really hot. Then we see things cool off a little bit, and then you see the alt start to run really hot as well. And I know we have seen a little bit of you know, a very meme-driven landscape and stuff like that at the moment. So, you know, there's always these kind of dynamics and changes in the market. However, for me, I'm still really excited about this. I still think we've got a lot of room to go and a lot of room to go up. So it's just all about plans. If I wanted to really make this, you know, in terms of an intraday, what I would be looking for here is the same kind of principles here, but a recovery on the 15-minute. Yeah. So for your intraday traders out here, we can see, you know, these bearish gaps, bearish order blocks are ultimately protecting price at the moment, right? So what happened here? Up close candle, price closes below, confirming this as an order block, an area of supply, retest, price sells off. So if we're bearish, we want to see the up close candles defending price lower, right? So what we need to see that violated. We've had that kind of first stage of it here, because we can see here, small down close candle, a little bit insignificant compared to these, yes, but we see price close above, retest the area, and it moves higher. Where does it move to? It moves to the next pool of liquidity or area of interest, and that's this gap. So now what we want to say is, okay, if the bullish momentum needs to continue here, we want to see price close above this, yeah? If we close above that, then we invert it, meaning that we then look for this to hold as support. Then we know where our next target is. There's no more gaps in here, right? So we're going to come up, I think, to retest this order block. Ultimately, we want to see that, or we want to see a structure recovery, yeah? Meaning that, you know, obviously we're in a downtrend here. We want to see this set as the lower high, then a higher low. Then we want to see this move through it. On the move through it, this ultimately gives us our structure break. And that's where we can, you know, look to get involved. But again, it's really down to you and what your kind of trigger mechanisms are. But for me, I'm either going to be looking to finesse this on the hourly or the 15-minute here to look for that, you know, can't even speak today, to look for that reason to get long again. Do I want to short here? Not really. I got pretty high conviction that price is going to come down and kind of take out this low at 62,674, but it might not. You know, like we said last time, very open, always transparent about the decisions we made. I was looking for deeper on Bitcoin previously. We didn't get it. It had that rip. And we were prepared for it. You don't need to catch tops and bottoms of moves. You just need to be, you know, aware of where it makes good sense to be a buyer or a seller. Okay, so like I said, when we had this big breakdown over here, actually looking for this low to get run, the fact that we set this here and then saw that resurgence, incidentally, off the back of one of my favorite little patterns here, which is an inversion gap, should have offered resistance. Yeah, didn't, close through, immediately offers support. Very, very classic support resistance flip. Obviously, we're delivering bearish here. Expectations for price to come in here and then continue down, didn't, closed above, get the retest. That was the resurgence we looked for. And then quite simply, exactly as I just mentioned to you a moment ago, with then, and I would favor this as the order block here because this is very small and within this range, yeah? And then we're just looking for these up close candles. So down close candles in this case to protect price, yeah? So order block set, retest, away we go. Order block set here, price sells up. Now we've got a situation where we've got this one here, which is represented by the black line, but also this blue box, which is why I want to see this hold. You know, basically, I think this could very easily be a move to flush out a lot of over leverage, to maybe get people that were late longs here, take out the stock, generate the liquidity, get back above this level quite quickly, and then focus on conquering this level. And then I think we start to move up quite quickly to these higher targets. One here from Seb as well. Is price currently developing a bear flag for New York Open to dump. Okay, so on a daily scale, potentially, I would say that, I'm someone that trades very specifically the New York trading sessions, right? You can see them depicted on the chart down here. This is New York AM, which my time starts at 1:30, which for UTC will be 12:30. But yeah, I mean, on a on a much lower time frame, maybe this is forming a bear flag here, right? Or a rising wedge. I think you'd probably want to move to a really low time frame to see that. This pattern, and I'm not a pattern expert, if you want that, you need to be following Crypto Burb, but also Axel Kaibar, another CMT chap who's one of the best I've ever seen with patterns, and has all the statistics behind them, knows that this has, I think, the high 60% or early 70% chance that a rising wedge breaks to the downside. And the same is true of a bull flag, right, which we would see angled the other way. So yeah, with this one, what we can clearly see is price is kind of compressing here into this space. What I would say about the New York trading session, if we look back over here and you're looking at these, quite often what you'll get with the open of New York is the market will swing to the opposite direction that it's looking to trade into. Now, this is looking at that as an intraday trader, just to give you an example of that here. What happens if we look at this session here when it opens? Yeah, we just put a vertical line on. In fact, let me just do this quickly. All right, so this is the beginning of the session. Why is it important? And this is pre-market. It's because the liquidity that comes into the market and the volatility. You're talking about the biggest trading session in the world, is the New York session. And this is the AM, this is the morning. So they're reacting to what's happened during London and what's happened during Asia. Typically, which this red box signifies, big shout out to our dear friend Gio as well, who made this indicator for us in-house over at the Bird Nest, and it's wonderful. What you often see is a consolidation during Asia, yeah. Then what we see here, we see a run on that liquidity in London. But then we see price come back down here as well, and then it attacks the liquidity again here. So this move to the offside is designed to trap people. Why? Because we're delivering bearishly. Yeah, we've got a key support level down here. Price is just starting to edge downwards, all right? So what happens? People typically come into this late, right? People are like, people are very hesitant to be short here at resistance. The closer you get to support, weirdly with people, and it always seems to work this way, is you see people start to ape into the shorts down here because they wanted so much confirmation. What happens? Market comes and takes that liquidity out. Okay, so this is looking at it as an intraday trader on these time frames. I'm looking to get in and out very quickly, but ultimately what happens here, the initial move off the market here is down. Yeah, that's to induce shorts. We come and take sweep liquidity, get back above very quickly, ultimately then go up. All right, and you can see it chops around quite a lot here, but it does ultimately get up to our eventual target over here. Now, the opposite can be true as well, obviously, if you're looking to short these assets sometimes, but typically when you look at these big runs and doing it on an intraday basis as well, this move here was just a very small and subtle sweep right at the open to take that liquidity. But even then, if you saw this as the manipulation move higher, yeah, which would be very easy to do, you're above New York's opening price, below midnight price, the chances are that your risk to reward is better for shorts here than it is to longs to this high. As long as you get your triggers in here, there's still plenty of money to be made on this short on the way down. Yeah. Even if you get a very average starting position here in today, you've got 0.5%. No, it might not sound like a lot to you, but trust me, on an intraday basis, you can make an incredibly lucrative career trading those percentages. So for anybody that is interested in those sessions, then what I would say is make sure you do your data research. You understand every session very intimately. Marwan, do you also, do you know what, mate? I don't. In truth, it's something I studied quite a while ago. It's something I look to bring in. I very, very, very much try and keep things as simple as I can for myself. I watch the news. I look at the releases that we have every day. Speaking of which, actually, while I'm talking you through this, I do want to take a look at this week's news for you guys because it is important. It's certainly something that I always factor in, and not to be preachy, but I think it would do everybody, if you're not aligned with this, will help you get an understanding of the market's appetite for risk, okay? Focus on the US markets here. They are the major catalysts. You can use something like Forex Factory, or you can use our very own Bird Nest website as well, which will give you the heads up on all of the upcoming economic news, as well as a lot of other goodies. In fact, let me show you, because this is just, it's completely free, right? You can just go on there. We've got the crypto heat map, which you can see here. Immediately across the market, just gives you a very, very direct and very visual influence of how things are going on. Doesn't look good for risk, right? You go on here, and you go to tools, now you can say, okay, well, let's take a look at the stock heat map. What's that telling us, right? The different levels. This is for the S&P 500. We can see we've got a real mixed bag today. So price is a little flat. Tesla's back up. That was a brilliant bid a while ago, and it was down 8% off of some hooky news that came out. Nvidia as well, down at the moment. This is a huge part of the reason why the S&P 500 and the NASDAQ have been so successful. Both are down today, right? And what does that tell us? Well, the fact that they're both down tells us that maybe the appetite for risk is waning a little bit. If you've got a strong dollar, if money's flowing into bonds, then typically you're looking at the other side of that being that the risk appetite is low. But historically, what we have seen is that these dips are very good for buying. All right. Now, that's not financial advice, not suggesting you go out and do it, but it's definitely something worth considering, right? If you look at the timeline and the horizon. Now, the other thing I wanted to show you on here is, the economic calendar, right? This is just so very important. Now, we can see here as you move through the months, all right? So you can move back up to here. We can see the week starting on the 30th. And we can see as we're moving down into here, you've got the US news, you've got the European news, everything like that. And what you want to be able to do is decant what that means for the market. Now, if you don't want it that kind of in-depth and detailed, then, a site like Forex Factory, for example, and we don't have any association with Forex Factory. I just I've always used them since I was, studying traditional markets as well. Look, Monday today, what's the key thing we want to watch out for? You just want to watch your positions whenever this man takes the stage. Yeah. The Federal Reserve Chairman, Powell. Okay. That has the potential to move the dial massively. Now, this is just decanting information from why they made the 50 basis point cut, which was super bullish for the markets, but does come with an element of risk. And that risk is that we price in a recession goes higher, because a recession is lagging to that. And you're talking about typically 6 to 8 months, but I think had a brilliant discussion with this recently with Crypto Burb, where that time horizon seems to be kind of evolving now, 6 to 9 months, maybe 9 to 12 months. But basically, if they cut rates too quickly, if there's too much of a stimulus going into the economy, inflation will go back up again. It kind of undoes what they've been modeling out to bring inflation and interest rates back down. So that's interesting. What we're looking for there is the tone of how he speaks. Is he hawkish or is he dovish? That's basically bullish or bearish, right? Is he saying things like, well, we've cut now, we're maybe not looking to make many more cuts before the end of the year. That could make the market have a bit of a wobble. Or he could come out and be incredibly dovish and say, like, actually, the reaction that we've had from that initial cut is very, very positive. We're confident that we'll be able to make further cuts before the end of the year. Just the idea that the economy is getting into safer space, that it's getting in, that it's leaving that room for progress, it's leaving that room for the risk bid, then that's what we really want to see light a fire underneath risk assets that will ultimately be good for Bitcoin and therefore cryptocurrency. Hey, Pitt, how you doing, brother? So that's where we are. So that's tonight. That's 6 p.m. my time, 5 p.m. UTC. There's a very big chance that the markets could just look to chop around and consolidate until they get a bit of information here. Also, we need to remember it's Monday. A lot of traditional market traders, myself included, relatively hesitant to trade on Monday until Monday's range has developed. Now, Tuesday, ISM manufacturing PMI, and we've got JOLTS job openings as well. Through to Thursday, we're looking at unemployment claims and ISM services PMI. Okay, this has had a really big effect recently. It's kind of been a little bit above, a little bit below. That, when we combined that a few weeks ago with good retail data, which came in miles over what was projected, caused this really, really big pump. So just kind of keep your eye on this, right? Friday, obviously, we've got a really big one here as well. Non-farm employment change. We've got non-farm payroll, unemployment rate coming in, and average hourly earnings month on month. You can see previously that was 0.4%. They're forecasting for 0.3%, so expecting a little bit of a downtick here. Ultimately, the news this week has the ability to really change the market either way, or it could be benign. The key thing is to just watch for that, especially if you're an intraday trader, right? These kind of injections of volatility can be really, really good things because it often kind of elaborates the manipulation leg like we were talking about. And let me just show you here. It's a lot more kind of prominent when you look at it on something like the NASDAQ. I'll just pop the session breaks back on for you so we can see the day dividers. Yeah, on these high impact news days. Now, look what I was talking about here. Market opens here. See, you get this move to the offside to attack key liquidity. That's the high of day. Yeah. Then you see the absorption here. Ultimately, the market then makes the move in its, its intended direction. We got the same thing here in London. London opened, we saw the move to the offside, taking out Asia's lows, which then allowed us to pump. We came into a key SR level here, or for me anyway. So we see this resistance here, but ultimately the secondary move was then there to be faded as well. Now, of course, you can apply these same kind of methodology to higher time frame charts. But obviously you don't have the luxury of having the open and the closing of the sessions. The other thing to kind of look at today here is the dollar index, right? So we're back below the midline here of our range. And this is really important for me because, again, we saw a really strong rejection here at the 100.993 level. This is a key pivot point for me. So the dollar index is the currency, obviously the dollar, but basketed and weighted against a basket of other currencies, which is slightly heavier weighted towards the euro than anything. It's basically like a little bit of a risk indicator for me. Yeah, so if I'm looking at the markets and we see, this trending down quite strongly, then it's telling me that, the institutional money is moving away from the safer havens of the dollar. We can also see over here as well, although slightly conflicting today. But also what's playing in my opinion, to this falling risk bid is the fact that the US 2s and the US 10s are making recovery here as well, which are the bonds. Again, bonds are a bit of a safer option for investors. So when you see money going into that, can often mean there's a bit of uncertainty in the market, or that, people aren't willing to take that kind of risk exposure. So yeah, that's where that is there. One thing I just want to do before we close up here, I just want to take a look at ETH with you all right? So let's take a look here, because I think we've got a nice clean chart here with ETH. So let's just kind of look, okay, what are we looking at here with ETH? Immediately as I'm kind of looking across the line here, I can see this level, right? And it's not perfect. They rarely are, right? But I'm looking for recency, and remember, again, looking for that kind of violence in the reaction of what's happened. So here, price tags this level, we get a sell-off, reclaim, retest, big pump, nice reaction here as well, nice reaction here. Could obviously be a little bit closer to that here, but there's probably like a secondary level, I would say, in and around here, whereby we see we've got a lot of touch points, rejection, rejection, flips, support, 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 deviation, big pump, right? You can see the support and resistance flips that we have around here as well. Looks really close there, right? But actually, remember, this is a weekly chart, and actually you're dealing with like almost a 10% range there between levels. Sui is Grandmaster Pikachu. I've not seen you on here in a while, my friend. Good to see you, mate. Sui, yeah, very hard to argue with that, mate. Very hard. But anyway, so this is kind of a pivot point, a level that I'm interested in at the moment. While price continues to run higher, I think this level here is definitely worthy of a watch, which is 2819. Now, we haven't set an order block here on the weekly. Price is still drawing up to this level, but we did engage with this bearish gap here before price sold off. The fact that it's found support at this level and not ran that weekly low could really be a sign of progress. And yeah, big shout out to my good friend and a wonderful member of our trading team over at the Bird Nest, Just Pitt. I keep telling people to follow him and people don't. If you're missing out on his Twitter, his X, if you just come and join us at the Bird Nest, I think you would probably have paid a year or 2 years of professional subs in the last kind of 2 or 3 weeks just taking his calls alone, let alone the rest of the trading team who have just been absolutely crushing it. So like we say, these aren't things, these calls and the access to these professional traders' calls are there so that you guys can make a little bit of money and focus on learning so that you can go and do it yourselves. Somebody, I don't know, Erica, if you're still on here as well, my lovely, I don't suppose you could ping us. Oh, no, actually, hang on, I can do it here. Let's have a look. Where's my boy? Just Pitt. Here we go. So make sure, I know loads of you won't do it and you're just absolutely mad, but I would give this guy a follow. I really, really would. So anyway, before I digress too much, back to the chart. ETH, just so we can close this up in the next couple of minutes. What are we looking at? Well, again, ETH, we've got this weekly, so like Bitcoin, excuse me, we've got this weekly gap below us, right? And I think that's potentially drawing price in. We don't have to revisit that, but very, very often when we see these gaps, we do engage with them to rebalance them. I'm going to move this onto a daily now and say, okay, well, If this is the draw lower, what do we want to see? Well, at the moment, I'm not entirely convinced still, because we have just set this order block here. Yeah, what happened? Price came up, closed above it here. Now, the tricky thing here is that we immediately swept liquidity from this high. Yeah, so price came in, swept liquidity from the high, and now naturally we're seeing this kind of pullback. So we're rejecting from this gap here, but we have come up and rebalanced this now. So ultimately, I really want to just see the equilibrium of this continue to hold. If we start to close down below this on a daily scale, I think we go for this low down here, which is around about, well, I'd say exactly what it is actually, no, 2556. We then have this low, which is a gap low, sat within this daily gap, which can be a really good catalyst. Still feel like price could draw down a little bit lower here, really catch people offside before we get that pump. All right. Hey, Nick, how you doing, my friend? So just now to look at that, just make that a little bit more granular. This looks like a very promising reaction straight away. Yeah, price getting bought up here, price getting bought up here again. It has not quite tickled into this little thin gap that's in here, right? But on the 4 hour, I've only got 2 minutes left, unfortunately, so it looks like the 4 hour bearish gap here is going to win its battle. But we've swept this low. If we can recover this now and hold this here, then maybe we kind of see this pump up into this level. Again, this is my kind of line in the sand here. I want to see price, reclaim this to move higher. All the assumption is that price is just looking for liquidity lower, and we have a lot of really good options down here, right, for price to hunt out. We've got this swing low here, we've got this swing low here, we've got this one here that just resides within this gap here as well, right? So we can see why price could really be drawing down towards this. And then in here, that's when you want to see that sharp reaction back out of it. All right, giving us that encouragement to be buyers. If we really want to go down to the ultimate kind of, not the ultimate time frame, but one that we can kind of get probably our lowest read on is this one. So what have we done here? We've just inverted this actually. So this is showing a little bit more strength than Bitcoin. What I like here is we've run out Asia's low. We've now recovered this. The likelihood for me is that price is heading up for this high. It just seems the most clear and obvious. That's at 2,642. And what do we do then? We've got confluence with this bearish gap, right? So in terms of intraday, this is where we could start looking at the catalyst of the open or the pre-market for the New York session, which is in about 30 minutes, to get that move to the offside, yeah, and then see that pump to the highs. Just to give you an example of that, yeah, we would look for something like this. Yeah. Now, this was a very small sweep here, but we did have it at a key level. Price moves in. Yeah, we get the sweep of that level as the session opens. Again, remember, like I said about these traditional market sessions, often these opening moves are to kind of catch the market offside. That's what you see. So we get the manipulation. Then we get that pump. Everything takes place under the New York opening price, showing us that from a risk to reward perspective, it makes sense to be long here, as well as the fact that we're fairly overextended to the downside. This is the kind of thing we want to see. Although I always treat it with more preference if we get that deeper sweep. Yeah, would have preferred to have seen this happen and then take it out. But ultimately, this is a sign of strength here. As long as we engage with that framing time frame, we can put ourselves in a position to say, okay, where do we go from here? So this close above here, I like the fact we've closed above this order block as well. Just want to see this hold here, right? I think we start closing below this. We do have this gap here, but ultimately these equal lows then become the cleanest target down here. Equal lows, equal highs, always really, really good targets for engineered liquidity. So we break down and close back below here. I think this is the continuation of the move lower. I think as long as we hold above here, I think ETH could be seeing a bit of a resurgence up to these levels. But we do need to remember that in literally actually just this very moment gone, I was about to say in a few seconds, we have closed this candle now. So that remains a very prominent gap until the next 4 hour candle closes. We would need that close above this. But two really nice long downside wicks here. So ultimately, let's see what we get off the back of this. It's showing some absorption here. Maybe it's ready, maybe it's not. But if we're just patient, we wait for those structural breaks, we use that 15-minute, hourly, whatever kind of time frame trader you are, to watch that shift in momentum, to watch that shift in structure, then, I think we should have a pretty clear trading week ahead of us. And hopefully Monday is setting the low of the week. All right. So look, thank you all so much for joining the stream. 3,500 people live with us today, just through Twitter, I believe. We've got others through YouTube and everything. Really, really, really appreciate you all. Please do check out everything in the description. Come and join us over at BitGet. Be part of the team over there. Get exclusive calls, education material, and loads of goodies. Whether you're a spot trader or focus more on futures like myself, you can come over, join us, get access to the calls at the Bird Nest as well. And like I say, those call stats will be printed out later today. You can see for yourself exactly how profitable members have been, and really lovely to see you guys as well in the chat speaking so highly of the team. And a big special mention to Pitt as well, who has been one of our real star performers in the last kind of month or so. Wishing you all a fantastic week ahead. I will be live again with you on Wednesday when we're going to have our focus on altcoins. Let's see if any of these kind of premonitions have come true, if we're in that state of recovery at that point, or if we're still looking for buyers lower down. All right. Wishing you all a fantastic week ahead. I look forward to seeing you all around the nest.